I do believe that people protect themselves with precious metals, and then there are other methods, and maybe cryptos will do well through this. But I do believe we're going into a big financial upheaval. And I think it's going to make the global financial crisis of 2008 look like a speed bump on the way to the main event.
One of the big reasons that homes have gone up so much into a super bubble, and it's simultaneous with a real estate, a stock market bubble that's of historic proportions, and the bond bubble has not deflated yet. So we've got this the first time in history where it's the almost everything bubble. It's only gold and silver that are not in bubbles.
The growing imbalance within today's financial system is accelerating toward a point where traditional assets no longer offer protection, and the purchasing power of national currencies continues to erode with each cycle of debt expansion. With housing, equities, and bonds all elevated in synchronized bubbles, the only significant assets not trapped in speculative excess remain gold and silver. This environment underscores a much larger transition, a shift away from debt-based currency models and towards scarce, tangible stores of value as global deficits and systemic leverage reach historic extremes. Mike Maloney, a longtime educator on monetary history and wealth cycles, stresses that the foundation of modern currency rests on continuous borrowing, dilution, and long-term loss of purchasing power. His framework highlights the structural flaw in fiat systems. Expanding credit must always outpace repayments or risk triggering a deflationary collapse. Against this backdrop, precious metals stand out due to their fixed supply growth, centuries of monetary utility, and ability to preserve value independent of banking mechanisms. As currency units multiply and real prices distort, gold and silver re-emerge as anchors in a system strained by unsustainable promises and political reluctance to restore fiscal discipline. Now, we present the clips from Mike Maloney's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I do believe that people protect themselves with precious metals, and then there are other methods, and maybe cryptos will do well through this. But I do believe we're going into a big financial upheaval. And I think it's going to make the global financial crisis of 2008 look like a speed bump on the way to the main event. The thing that makes gold an excellent form of money is, one of the things is it's limited in supply, but the stock to flow ratio, we've been mining it for about 5,000 years. And it'll fit in a cube, I believe, 40 meters or 40 feet, I can't remember, on a side. The length of a tractor trailer rig on each side. And then the amount that is mined each year, the stock grows at about 1.5%, but we make babies at about the same rate.
Okay.
And so the amount of gold above ground per person remains about constant throughout the century. Now, if we were using gold and silver as money and didn't have all these other representations of value that can be expanded by some entity like a bank, people don't realize that about 90% of all the dollars that exist are created by the banks, not the Federal Reserve.
Yeah.
The Federal Reserve creates the currency in your wallet, but the digits in your bank account are all created when you take out a loan for a car or a house or pay a credit card bill. The bank types those into existence. You owe them back plus interest. But anyway, under a world where you've got honest money instead of dishonest currency that is based on fraud, theft, and enslavement, if you've got honest money, prices would continually come down. You have to look at the time value in stuff. Humans used to spend all of our waking hours trying to gather enough food for dinner, basically, just to survive. Now, we've got big houses and cell phones and all these TVs and computers and cars, and it just goes on and on and on. And so the amount of time that you actually have to spend working to be able to eat dinner is just minuscule. Yeah. So basically, the real price, the amount of your time that you've got to spend accumulating these things, everything has been getting cheaper century after century after century. And there is this illusion that is caused by fiat currency that things are getting more expensive. Borrow the first dollar into existence, and it's the only dollar that exists on the planet anywhere.
Yeah.
You've got $1, but you promise to pay back two. That dollar plus a dollar's worth of interest. But you can't, if you pay this, when the debt, the currency, meets the debt on the balance sheet, they annihilate each other.
Yeah, they're
So these dollars are always vanishing. The ones that you pay back vanish. The interest is what the bank or the U.S. the Federal Reserve collects, and it's the profits. But we always have to. Currency is constantly being created and destroyed and created. So we borrow it and we pay it. But we've always got to borrow more than we are paying off to keep ahead of the game, or the entire world goes into a deflationary implosion. So it is always, there's always about twice as much debt as there is currency in existence to pay the debt. And so if we try, we end up with no currency supply, it vanishes, and we still have a whole bunch of debt left that we're supposed to pay with nothing because there is no currency.
Yeah.
So it really is an impossible situation. And we are reaching, you can see with the levels of deficit spending, and I mean, politicians don't even seem to care anymore. And every politician, every president runs on a platform, we're going to balance the budget, we're going to eliminate all of this waste, and then they get into office and they do the exact opposite. Every one of them has lied to us. And personally, I'm a little tired of it. But the only way that I can see that is proven throughout history for the past, gold and silver have been the primary medium of exchange for the last 5,000 years, and they've been money for a little bit more than 2,500 years. When King Croesus in Lydia declared that the gold and the silver should be separated and minted into coins of equal weight, that's when they became fungible, and you could put a price of so many silver coins on a loaf of bread, so much gold on a house, or whatever. Now you actually had money. That money, one of the reasons it's money, and Aristotle defined these things, medium of exchange, unit of account, but most of all, a store of value. And the very math behind all of the national fiat currencies guarantees that they cannot store value. It's impossible. The currency supply always has to become more and more diluted because we've got to borrow more into existence every single day than we pay off, or we go into this deflationary collapse. And so the dollar used to be worth 1/20th of an ounce of gold. Today it's worth about 1/4000th of an ounce of gold, meaning that it's lost 99.5% of its value since the Federal Reserve became the custodian of the dollar, protecting the dollar's value.
Yeah.
They've driven it down by 99.5%. So at what point does the public wake up and stop calling this money? And so I put this in my first book. I've been on this one-man war to try and get people to use the proper terms. But there is no nation on earth that uses money. There is most likely no money in your pocket. If you've got a wallet, it's got paper IOUs in it from the Federal Reserve. And it's an IOU nothing. Because I went into the Bank of Hong Kong with their notes, because it says right on the Hong Kong dollars that you get, the notes, it says that it's fully redeemable at the Bank of Hong Kong, and it gives the address. And so I went in there up to the teller window, slapped my currency down on the counter and said, I want to redeem it. And they were totally baffled. They get the manager. I mean, it was just totally insane. They had no idea what those words meant. And it's a leftover from the day when people could take their currency, their claim check, on money.
Yeah.
When on the classical gold standard, late 1800s until just after World War I, a U.S. Treasury note, United States $20 bill or $100 bill, fully backed by $20 gold coins at the Treasury.
Yeah.
And you could go into any bank and slap down your currency on the counter and ask for your money, and they would give it to you. There is a difference between currency, and money does not vanish. When we used to live in a world where people would bring in savings and deposit gold coins, and then the bank bank would pay like 4% in, and then they would or 5%, and then they would make a loan to a business or somebody building a house at 8%, and the bank's profit was that spread, that arbitrage. But the public got these high interest rates being paid in gold, and the gold, when the money meets the debt on the balance sheet, the debt is paid off, but the money still exists. It doesn't vanish.
Yeah, yeah. That's not the case today.
No, no. It's all today. Currency creation is all a sleight of hand trick. It's a balance sheet trick. The operative word being trick, and it's typed into existence. It's nothing but a number supply. It's not a money supply. It's a currency supply. It's an unlimited amount of numbers that they can type in. The difference between 1 and 1 trillion is 12 zeros.
Rising tariff burdens, distorted housing incentives, and decades of monetary manipulation are now converging into a system that accelerates wealth transfer rather than productivity. Import levies never fell on foreign governments. Domestic buyers absorbed them, passed through supply chains, and ultimately paid by households already pressured by inflated living costs. At the same time, structural incentives surrounding immigration-linked lending, politically driven subsidies, and expanding deficit programs have helped fuel an almost everything bubble, with real estate, equities, and bonds all elevated beyond sustainable value. Only precious metals have remained outside this speculative surge. This environment stems from a currency framework that expands credit far faster than genuine savings, creating perpetual dilution and eroding real purchasing power across generations. Prices rise not from scarcity, but from an ever-growing supply of bank-issued digits, while debt obligations compound against a shrinking store of value. Let's get back to the interview.
Every importer was charged these tariffs, not China. There is no foreign entity that actually paid taxes into this thing. It all came out of the pockets of Americans. First, the importers were hurt, and then they have to pass on the costs, and it works its way up the chain to retail, and eventually it's the consumer paying it. Now, who consumes the most? The people that make the most, and they make the most by producing more than they consume, actually. That's the reason their paychecks are high. That's the reason they've got excess cash, is because they're producing more than they consume. And so this is a redistribution of wealth, any way you look at it.
Exactly. And something that Trump tweeted on Truth Social here is a dividend of at least $2,000 a person, not including high-income people, will be paid to everyone.
Okay,
So,
not including the people that paid most of these taxes. They're not going to get it back. It's going to be given to other people, which buys votes. So it's going to be more low-income people that get these checks, and it means more to them. But it's just another way of buying more votes. So
exactly. It's socialism any way you look at it.
And it's if people did receive a $2,000 check, it's very hard to claw that back if the Supreme Court decision is that these tariffs are constitutionally illegal, because the power to tax is supposed to belong to Congress, not the president.
Yeah, the power to tax is the power to destroy, right? That's what I thought you were going with that.
The $2,000 dividend could come in lots of forms. Oh,
yeah.
Tax.
So this is what Basent said. Yeah, the $2,000 dividend could come in lots of forms. It could be just the tax decreases that we're seeing in the president's agenda. No tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans. Those are substantial deductions. LOL, you're not getting those checks. So this is basically what was promised on the campaign trail. And now it's like, oh, you're going to get a $2,000 check. But it could be the case that it's just another version, another form of packaging on what was already promised.
Right. And now, if it is a tax deduction, which, you've got to file by April 15th, that gives plenty of time to do a clawback, and then these deductions would go away. So it was just it was basically a tweet that, let me see. This is a quote from the Shawshank Redemption, a tweet that disappears like a fart in the wind.
The man up and vanished like a fart in the wind. Ah, love that movie.
Right.
Yep, that's a good one. So we can kind of sum it all up like this. Politics in one picture. Once I'm elected, I will become vegetarian. Loan locks to immigrants without permanent residency, including H-1B visa holders. So we saw a huge rise the last 4 years or so. And then there was just a ban on giving FHA mortgages to that type of visa holder. And all of a sudden, it plummets down to here to levels lower than what we had before. So
Right.
basically, it was all immigrants.
Okay, Dan talks a lot about this same thing in Australia because he's from Australia, and there the problem is actually much, much worse than this. But this is actually horrific. And it's so true that, quote, this is the reason you can't afford a home. This is the reason that one of the big reasons that homes have gone up so much into a super bubble, and it's simultaneous with a real estate, a stock market bubble that's of historic proportions, and the bond bubble has not deflated yet. So we've got this the first time in history where it's the almost everything bubble. It's only gold and silver that are not in bubbles. So, okay.
Exactly. So, yeah, I can't blame anyone for responding to these incentives. We have to change the system itself. We have to change the system itself. And here's what the system looks like. Just for example, the gross federal debt, if you look at it since 1790, okay, a couple hundred years, it basically didn't go anywhere until we got the Federal Reserve, and then all of a sudden it shoots up like a rocket. You could split this into capitalism, and then all of a sudden we got socialism, starting with the monetary system, and it doesn't matter who's president. It doesn't matter if it's a Democrat or Republican. We get more and more and more debt for more and more socialist programs. That's how it works.
Yep, absolutely true.
And the exact same thing happened with the CPI, the overall price level. So we basically had capitalism for over 100 years, 140 years, and prices generally went down when we weren't at war. And then we got the Federal Reserve, and then prices go up whether we're at war or not. And in fact, the existence of the Federal Reserve makes it easier to go to war and have forever wars. And again, it doesn't matter if we have a Democrat or a Republican, or if they campaign on socialist policies or capitalist policies, we're going to get socialist policies. That's just how it works.
Under a hard money standard, if we never left the classical gold standard from before World War I, a single family median price home would probably cost $1,000, $1,500. You'd only be making $1,000 a year, not $500,000 a year, but you would be able to afford more. The average person would be richer and more successful because humans always get more efficient, and then we're extremely inventive. We keep on inventing technologies that make things more efficient, and they should be cheaper. The smokescreen that keeps you from perceiving where true value is this fiat currency system, where they're targeting, why is the Fed targeting 2% inflation? Well, that's basically, if they inflate prices by 2% each year, and you're saving in US dollars, they've just taken 2% of your work last year that you spent to accumulate your dollars. They took 2% of it from you. So it's part of your lifetime is being taken.
Yeah.
It's highly immoral. It's based on fraud. You think you're borrowing something from the bank that the bank has. No central bank has anything. No bank has anything. They type these brand new digits into existence. It's loans that create deposits, not the other. It used to be deposits created the capital that a bank could then loan and collect interest on. And it was a very moral, honest system. Now, the bank just does this balance sheet trick. You ask for a loan, you find a house that you want to buy.
Yeah.
The house is $1.2 million. You go to the bank, you say, I found this house over here that I want to buy. It's $1.2 million. I need to borrow $1 million. If you've paid your loans in the past, your credit's good. They go, okay, well, the collateral is worth more than the loan. Sure, we'll loan you $1 million. They type $1 million into your checking account. And that is where the currency comes from.
Yeah.
Now the bank actually owns the house, not you. You've got to work for the next 30 years to buy the house from the bank. And when you pay the seller, that brand new currency that did not exist a moment ago is now out in circulation and gets its purchasing power by expanding the currency's supply, diluting it, and stealing a little bit of purchasing power from every unit of currency in existence. So the first part was fraud. You thought you were borrowing something from the bank. They don't have any. The second part was theft because they stole the purchasing power from the public, and then you are going to work for the next 30 years to pay the principal and the interest on the house. You are now enslaved. Fraud, theft, and enslavement is the way that the entire monetary system works currently. It's immoral, and we would be much, people say, well, interest rates would be higher if we were under gold. We wouldn't grow as fast. No, there would be less wealth transfer from the middle class to the ultra wealthy. The middle class has trouble keeping up with all of the inflation and so on.
Yeah.
And the people that are able to heavily use credit creation get ahead, but it's at the expense of the general public.
The broader system continues to reveal the same underlying truth. Expansion of debt has replaced genuine economic progress, and the currency structure built around it no longer supports long-term stability. Real wealth keeps shifting upward, while households face rising costs, shrinking purchasing power, and a banking model that creates credit far faster than productivity. Under this framework, nearly every asset class has been inflated through artificial liquidity, yet gold and silver remain the only stores of value not pulled into the speculative bubble. Their resilience stands in direct contrast to a financial environment built on leverage, political incentives, and accelerating dilution of national currencies. As more people recognize the erosion built into the current monetary design, the rotation into hard assets will continue to strengthen. With debt loads climbing and policy responses becoming increasingly reactive, the path forward points toward greater volatility, but also greater opportunity for those prepared. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.